Hi, this is Joel from the Market Ladder. I am the Chief Market Technician, and today we're going to talk about the market status. Today's date is February 5th, 2023. As always, there's a little bit of legalese I must get through before we begin. I am not a financial advisor. Please take any trades at your own risk. The stock market is inherently dangerous, and whether I believe the market is bullish or bearish, it can always turn on a dime and go the other way. Okay, so let's dig in. First thing I like to look at is a weekly chart, and I've looked at a lot of charts, but I've boiled it down to the three best, most indicative of the market conditions. So the first one I usually like to start at is a weekly chart, and this is of the SPY, and I'm calling this chart a bullish breakout. Just a little back history if you don't know what the SPY is. The SPY is an ETF, and it tracks the S&P 500. The S&P 500 is 500 of the largest U.S. stocks, and that gives you a pretty good idea of the overall stock market. It's a pretty good bellwether. A lot of people will use that when they're reporting whether the stock market is up or down. Okay, so this is what the SPY is doing. Every bar on this chart is a weekly bar. So if I take my pointer here and I look at this red bar on the very beginning of 2022, that's a down red bar. So the stock market had a down week. That's how you just look at it if you're brand new to technical analysis. All right, so what we can see here is that this was in a distinct and very clear downtrend, and it hit that line almost exactly every time since the beginning of 2022 for the entire year. But now, just these past 2 weeks in 2023, it is breaking above that line. So that would be a bullish breakout, and that means that we believe, or I believe at this point in time, that there is a strong possibility that the market will go up from here, but it can always go down as well. So that's the first thing that strikes me on this chart, and it's pretty clear, and it's pretty eye-opening, right in your face, like, wow, there it is, you can't deny it. And the other thing that I want to show you is that it also has a bull divergence on this indicator right here. This is one of my favorite indicators. This is an RSI indicator, and it's just simply a momentum indicator. Think of it as momentum. So as prices are going lower, the RSI indicator is making higher lows instead of the price making lower lows. We call that a bullish divergence. And the last thing I want to show you is that price, or the volume, which is shown right here. And if you look real carefully, you'll see a slight blue line that comes through here. So we've had above average volume at the same area that we're thinking this might be a bottom, market bottom. And that would also be a bullish indication. So we've got a few things going for us on this chart. We've got the breakout above the high, this trend line here, and we've got the above average volume at the base, and then we've got the RSI bullish divergence. So all those put together leads me to believe that we are going to make higher highs from this point. It could always turn on a dime, but that's what the all indications are showing. Okay, next chart, we're going to go into the daily, and so that's just like zooming in. And when we look at trading with ETFs or swing trading, we want to look at daily charts and get a little bit more clarification. So there's a couple things on this chart that I'm going to say have bullish characteristics to them, just like the weekly did. The first is, if you notice this green kind of window that sort of is trying to track the ups and downs of the market. Well, when you're in an uptrend, it usually stays above the green, or in the green and above the green, and when you're in a downtrend, it stays in the green or below the green. And so you can see from here to here, it sort of stayed above it, and then it went down. And very unusual, or not unusual, but very telling, I would say, is that right here where it's highlighted, it did not go below the green. So that's a bullish indication right there. and then again it's popping above the green, so that's a bullish indication. So right there I would give that, I would say overall that's a bullish sign. One other thing that you may notice is that there's a red line, or a red area as well. And so what this is, this black center line of the red area, is the SMA 200, or the simple moving average 200 line. That's what a lot of people look at for telling whether the market is bullish or bearish. And it's not simply a line, but it's a window, and it's just like anything else when you chart it. It's usually an area rather than a specific point. So this has a plus or minus of, I want to say 2%. So you would say 2% above this black line is here, and 2% below the black line is here. I've set it very close to 2% because I found in the past that even though let's say you go above it by a little bit, but if you didn't close more than 2% above it, you're still going to oftentimes find resistance. And so that's why I've got this, and it did find resistance here, but when it came down, notice again it didn't go below the bottom of the green, and it bounced up, and now it's above both the green area that we said is a bullish indication, as well as closing well above the red area. So this is a bullish sign, and that would conclude this chart. All right, so the last chart, I've drawn in some support resistance bands, and over time you're able to do that, or I'm able to do that just with eyeballing it, and you will too in time if that's what you want to do. But you can see right here on the bottom there's a support or resistance area here, and just above it there's another one here. So when price gets above this line, it tends to act as support, and when it gets below the line, it tends to act as resistance. Not always, but that's what price action tends to do. And if you look, you can kind of see if it makes sense here, like it comes down, it comes back up, and now it's finding that area and it hit resistance, so it comes down, it falls back through there, it didn't get support here, and then the first time it gets up to this line, it's finding resistance again, so it comes down and then it comes up. So that's just a quick overview of support and resistance. So if we look to the far right now, you can say, oh, price is now above this support area, which is true. And the only thing I would caution you is don't get all crazy on like an all-in position right here. And the reason I say that is because if you look at how far the market has come since, say, the beginning of 2023, well, it's come up a little over 10%. And if you go back and you look at how big the legs were on the previous uptrend back in October, mid-October, well, it came up 11.4% before it had a pretty good nosedive. And then in November, between November and December, it came up 10.3%, and it pulled back almost all the way back down to where it started from. So this is a support area. All signs are looking bullish at this point. Just use a little bit of caution before I would go all in right here. I might want to take just a baby nibble position right here and see how price acts once it gets here, but I certainly wouldn't be all in. But overall, the market is definitely showing bullish signs. So when I go look for my ETF trades, I'm looking for bullish ETF trades. That means I'm looking for the market to go up. Any ETFs that track up or down with the market, then I want to see any trades that make sense with the market going up, not down. Okay, and that's what I do. I'm going to do this approximately at the beginning of every month, so that it helps me understand whether the market's going up or down, and it helps you to kind of get a gauge of what technical analysis is all about. And that's all. That kind of wraps up the video for today. I hope you've learned something and found it interesting. Thanks for stopping by, and we'll talk to you next time. Thanks. Bye.